Good afternoon, attendees to the WorkWell's third annual tax prep roundtable panel discussion. We have participants that are starting to join us, and we are really happy and pleased that you guys have taken time out of your day to be part of this webinar. We're going to spend just a few more moments allowing some of the other people that had registered the opportunity to come and get checked in and admitted. And then we're going to start probably in about 2 minutes. Real fast, my name is William Hatfield, and I'll do a formal introduction when we actually kind of formally start the webinar. The format for today is going to be similar to our previous formats for this event, only we're not going to be live and in person. I'm going to be the moderator, and we'll be asking some questions to our panelists to kind of stir some initial conversation and try to touch upon some topics that I think a lot of us have right now as we're heading into our tax preparation season. And after the question is asked of one of the primary panelists, then the other panelists will be able to provide their insight and opinions and thoughts as well. And once we get through a few questions directed to them, specifically from me, we will then open up the panel discussion to audience questions. So feel free to utilize the chat box to either present your question, or once we get to the audience Q&A, if you want to just raise your hand and let me know that you have a question you want to address to the panelists, I will make sure that we are able to do that. So that's kind of what the format of the day is going to be. And we got more and more people coming in. I'd like to say hi and welcome to Dave and Maria. Ariana, good to see you on board. Javier, thank you for joining us. Jan has just got admitted. So we're starting to fill up right now. Very excited. I love this event, I gotta tell you. And I love when we do this event on site in person, because we have had tremendous response to this event over the years. This will be our third annual tax prep roundtable. And we're going to get started here in probably about 1 minute. Like I said, what makes this such a great event in the past has been our audience participation. So please, I encourage everyone, if you have any questions or comments, or maybe you want to share a unique experience that you've had in the early going of your tax preparation for 2020, feel free to share that with us, okay? Our panelists are all in place. They are WorkWell members who specialize in tax preparation and financial services. So extremely happy to have their expertise to share with us today. Joanne, good to see you, has joined us. Okay. Well, I think if everybody is ready, we're going to officially get started. So once again, hello and welcome to the WorkWell's February Lunch and Learn. You know, the start of a new year is a great time to set resolutions and kind of hit the reset button on having fresh start to the new year, and hopefully planning for a more successful year than the one we just had. And for a lot of us, we're definitely hoping that 2021 is going to be a much better year than 2020. However, the start of the year also begins that countdown to one of the least popular days of the year, and that's going to be our tax day, April the 15th. And now we are actually only a little bit over 8 weeks away from the tax deadline. So it's a good time, if you haven't already, to start preparing your tax returns. And this is also a perfect opportunity for us to hear some tips, some insight, and some expertise from some tax professionals on how you can tackle your 2020 returns. And as I mentioned earlier, we do have a few members of the WorkWell who are actually tax preparation professionals and tax preparation businesses. And they have graciously offered to be a part of our third annual tax prep roundtable. And in this roundtable, they will discuss tax tips that everyone should know for 2020. There are lots of questions for our tax returns this year, especially given the challenges that COVID presented in 2020. and the introduction of stimulus funds from the government and PPP plans for businesses, and what does all that mean to for my taxes? And that's a great question. What are some other new rules and regulations that maybe also introduced this year that haven't gotten as much attention or publicity because everyone's pretty hyper-focused on what stimulus monies may do to our taxes? So I am very pleased and happy that everyone has joined us today for what I believe will be an informative and very insightful panel discussion. I am William Hatfield, and I am the community manager of the Workwell. And at one point, we might also have our general manager, Marina Stewart, join us to say hi and to thank you for your participation today. We also have an amazing panel, and I'm going to go on and share my screen with everyone. All right. Sorry. All right, so welcome. So here are our tax professionals. Here are the members of our tax panel. And so I'd like to introduce them one by one, starting off with Joe Webb. Joe Webb is with Simplified Tax. Joe has been preparing taxes for 17 years and opened up his own business, Simplified Tax, with his wife, Joanne, 3 years ago here at the Workwell. They specialize in individual income tax and tax services for self-employed small businesses. Their company philosophy is simple tax, simple life. And I think we can all agree and give a thumbs up to that. Our other panelists include Brian Jones from Brian Jones CPA. Brian offers tax preparation, consulting, and tax resolution services for corporations, partnerships, and the self-employed. He is a board member of the Texas Society of CPAs and is the past president of the Houston Society of CPAs. His primary focus is helping businesses with their accounting and compliance requirements. He also has extensive knowledge of QuickBooks Desktop, QuickBooks Online, and Sage. His office offers additional services such as payroll, sales tax, and bookkeeping. There's a better look at our panelists. Yolanda Gray with YGG Tax Prep. Yolanda Gray with YGG Tax Prep. Yolanda has been in the field of taxes for 2 decades now. And this is her 17th year preparing and filing. She has worked for a large corporation, a large corporate income tax company for 14 years. And she actually ran 6 individual store locations, taught the basic income tax course to future employees and CPAs who were fresh out of school, and she trained store managers. She branched out on her own in 2016, and she has never looked back. She loves what she does, and she wants more, and rather than find another job or choose another career, she has become a business owner, still doing what she loves while venturing out into other possible avenues along the way. And once again, she's an on-site member. Brian is a member. Deb is a member. So we just love that we're able to support all of our small businesses here at the Workwell. And our final panelist is Deb Evans with Deb Evans Services. Deb is an enrolled agent, a federally licensed tax professional, and a Ramsey certified financial coach. She is a multipreneur, successfully operating multiple businesses over the years. She has worked in the tax field for almost 10 years. Her varied experience, especially in the creative fields, gives her a unique experience and skill set for working with self-employed professionals and other small business owners. She is a profit coach, assisting these individuals in building profit while also saving money on their taxes. So that is our tax prep roundtable. So I'd like to once again thank all of you for your participation. If you have any questions throughout the presentation, audience members, please post those in the chat box at the bottom of your screen. I will be reviewing that periodically for our follow-up questions during the audience Q&A. And I will also be posting notes, links to be able to contact our professionals. So it's all going to be there in the chat. If we don't get to your questions before the end of the webinar today, we will make sure that there is a follow-up email or some kind of follow-up communication to address those questions. You will also find the links to the Workwell, to our Facebook page, where we are posting about upcoming webinars, other events that we are hosting that are open to the public that we would love to have your participation in. We are recording this session and it will be posted to the Workwell's website. And it will also be emailed to all of you within the next week, week and a half, once we get the video edited. So with all that being said, we are going to start the presentation. And I'm going to address my first question. This is going to be initially addressed to Joe, but I would love to hear the feedback from everybody, because this is sort of a multi-part question. And I think this is the question that probably more people have on their minds than any other. So Joe, just initially, can you explain the difference between the stimulus and the recovery rebate credits? Do I have to pay tax on it? What if I received more than I was supposed to? Do I have to pay that back? And if I received one stimulus payment in 2020 and one in 2021, are they both going to be on my 2020 tax returns?
Yeah, so to the first part of that, just to break down a little language. So what we know is the stimulus was called the economic impact payment. And the first round that went out was based on whether you had filed 2018 or 2019, whichever one was filed at the time. And as long as you met the metrics that the government set forth, then most folks had that directly deposited. So the recovery rebate is basically a reconciliation of that advanced stimulus. So if you got everything you were supposed to get, your tax software, if you're self-preparing, is probably going to ask you those questions, and that's to reconcile. It will not be included as income. So if you got the full stimulus, you're going to plug in what you received. It doesn't get added to your income. If you got overpaid, you won't have to pay back what you got overpaid. But really what the recovery rebate is it's the credit on the tax return that if you got something less than the full amount or none of the stimulus, but you would qualify under your current 2020 adjusted gross income, then it's going to give you a credit for what you either didn't receive in full or would qualify for more of on the current year tax return. So basically the stimulus we all got was an advance of a credit that actually appeared on the 2020 return.
Excellent. Yeah, that kind of boils it down. I'd like to see if Debbie, do you have anything that you want to add to the overall question, you know, about the differences between the stimulus and the recovery debate, especially maybe when it comes to those that are self-employed?
Yeah, there's a lot of confusion, and there's a lot of confusion from people who get their tax advice from Facebook. So there's a lot of rumors going around that are not true. Early on, they said that it was taxable income. You'd have to pay taxes on it, then you'd have to pay it back, and all of these different things. One of the questions that people had was that some didn't get the second payment until January, but it's still 2020. If there's a third payment, that will be 2021. So that will be, you know, on the tax return for next year. The self-employed people, there's no difference in that as far as the stimulus goes. It just goes, like he said, it's a recovery rebate is what it's called on the tax return, but that's what it is.
Okay, excellent. So, so Brian, I'm going to ask you, because Brian specializes a little bit more in you know, the corporate tax world. Do you have anything maybe as it relates to business or corporate taxes with regards to the question here, you know, the difference between the stimulus and the rebate recovery, or the recovery rebate credits?
Well, no, the stimulus and recovery rebate credit, I mean, it's not involved in on the business entity returns. It's only related to individuals.
Okay, very good. So we will talk a little bit more, I guess, about the programs that the government introduced in 2020 specific to the to businesses here in a few moments. Yolanda, you are adding quite a bit of information during our pre-chat. Do you have anything that you would like to add to our initial question about the differences between the stimulus and the recovery rebate credits that you've come across?
Yeah, she pretty much hit the nail on the head. The Facebook rumor was that it's coming back out of your taxes, but what they're paying back, they might see a difference, and it's because a lot of people got unemployment without paying taxes out of it, and then a lot of people filled out their W-4s. They were a little, you know, confusing to HRs and to individuals, and so they were under tax. So that's what they're saying. The stimulus is not something that has to be paid back. I know back in I want to say 2008 or 9 when they did one. Those did come back from your taxes, but this one is not set up that way. So it's not something you're paying back. If you did not get it, then you get to claim it on your taxes, and that becomes, part of your refund, or it could take away some of your liability. But even people who normally don't file a tax return can also file, like people on Social Security or people that, normally would not file a tax return. This year, they can file to claim that recovery rebate credit if they did not get the stimulus.
Okay, very good, very good. How many, so this is sort of a follow-up question, and I guess I can address this to all of you. I'll start off with Debbie, with Deb. Tell me, so how many people are coming in that have never maybe utilized a tax professional in the past? They're coming in specifically because of the confusion that is related to what may or may not be owed and how their taxes are going to be affected by any stimulus assistance that was received.
Yeah, we're seeing that a lot this year. A lot of our new inquiries, our new prospects and new clients are calling and saying, I've always done it myself on TurboTax. I've always done it myself, but this year, it was different. And I think there's just so much confusion, and there's so much new things that people have finally reached that point that they're gonna, give in and get help. And they should, because there's a lot of stuff out there that is not as popularly known, that hasn't received as much attention, that is beneficial, especially to businesses, and you don't know it. And you don't know what you don't know, right? So I think that it's definitely worth the investment to have a professional walk you through it this year.
Okay, Eric. Kind of the same question for Joe. What kind of increased opportunities are you seeing from your end with regards to new customers, new clients that are coming in and coming in specifically because of their confusion with the tax change?
Yeah, I would echo what Deb said. I think there's just, we had the tax law change from 1986 to 2018 or 17, actually. We had the same code for roughly 31 years. So in 2018, we all got a big change, and we were just trying to get adjusted to those changes. And then COVID hits, and it changed a whole bunch of tax code that was recently changed on top of that. So it's kind of been a double whammy where people didn't even get set in understanding the new rules, and those new rules have been changed or modified. One thing I can think of just for people to be aware of, if you did happen to take a distribution from, a retirement plan, I would definitely advise getting with a tax professional this year, because while the penalty can be excluded, I think the software is going to default to taking that in a third over 3 years over the next 3 tax returns. You would have to opt if you want to take that all in 1 year, but that's something where you'd work with a professional to figure out, should I take the full distribution in 1 year, or should I carry it in a thirds? Because if you do that, it could give you a really nice 2020 return, but then in 2021 and 2022, you're going to be left with the remaining third of the distribution in each of those years with no federal tax withholding. So that's just a small sample of one of the other things that changed dramatically from what we had known previously prior to COVID. So.
Okay, excellent. Well, thanks guys for answering that first question. We're going to go to our next question. And our next question is going to be, let's see if I can, there we go. This one is going to be addressed specifically to Brian. And so, Brian, what I would like to ask you is, if a business obtained the first payroll protection program, PPP, can they qualify for another PPP loan?
Yeah, so in December, when a new bill they did pass and adding additional money to this program, if a business in 2020 actually had a decrease in revenue of 25%, or a decrease in revenue from 25% from one quarter in 2020 compared to the prior quarter of 2019, they are qualified to actually do a second round of the payroll protection program. So people will be entitled to get a second loan. But and if you did not qualify for whatever reason, on the first go round, you can also try to apply for the second go round.
Okay, very good. In terms of how businesses are incorporating and utilizing their received PPP stimulus or any other government assistance, what is it doing with regards to their tax returns and how they have to report that income? I guess not income, they have to report that those funds. How is it shifting from a business perspective, you know, the PPP into the tax return for 2020?
Well, you know, Congress kind of ran this through without thinking everything through. The initial go round was that, look, we're giving you this money and this money's non-taxable. So IRS took that and said, okay, it's non-taxable income. Therefore, none of the expenses that you use these funds with will be deductible. Then Congress says, no, slow down. That's not what we were meaning. So on the bill that passed in December states that you do get to, or the proceeds when the loan is waived, it will not be included in income, and you still get to take the deductions as an expense. So that's finally got corrected, and so thankfully, I was even telling my clients who were saying, I'm going, more than likely it's going to be taxable the way it started out with, but I'm going, look, you still get the money, you know, but everybody spent the money. No one's going to have the money to pay the taxes once they got it. But anyway, so but they did correct it. So now it's non-taxable and you get to take the expenses also.
Okay, very good. I know that of our panelists, Brian is the one that really focuses on, you know, larger business taxes, but we do have self-employed self-employed and, you know, singular solopreneur type of businesses that are filing business tax returns in addition to whatever they may receive from an individual income perspective. So I'm going to ask Debbie if she could maybe add a little bit of insight on, you know, how the small single self-employed workers are dealing with any kind of PPP funds that they may receive for their businesses.
I think that one of the things with the self-employed people who file a Schedule C is that they had a little bit easier time with the PPP because it was just based on your net, because that's your profit. And if they didn't have employees, you know, that's what it was. And then there weren't as many restrictions on how you spent the money, because it was just all considered like personal payroll kind of as a draw. So they did have a lot easier chance with that. What I see as some confusion is the PPP loan versus the other SBA loan and the EIDL grant. Those are two entirely separate programs, and there's a little confusion about the two. The SBA loan is an actual loan. It will come through, and it's a very lengthy loan that they want to have their hands in your business for a very long time. The PPP loan is the one that's actually forgivable, and most of the people I've been talking to have been successful at getting it forgiven. I'm happy to report that some of my clients actually did better in 2020, and so they're not eligible for the second PPP loan. And so it's very interesting to see which businesses are really rising through this and which businesses are suffering a little bit more. So I mean, it's very interesting how that's all playing out. But yeah, so I encourage everybody. A lot of people didn't apply for the first one because they didn't know. Like I said, you don't know what you don't know. So they didn't apply for it because they didn't really understand how it worked. Or so definitely take this opportunity if you didn't get it the first time to go ahead and apply for the second round.
Okay, excellent. This is probably a very naive, non-tax professional type of question, but is it possible that individuals and their personal tax returns would have to claim or allow for PPP loans that they could receive as an individual, or were all PPP loans related just to businesses?
You had to show business income. And so an individual person filing a Schedule C, it is personal, but they had to have been in business. They had to have that Schedule C to show from 2019. That's what the money was based on. Okay. I think the second go around was looking at 2020 though. but I'm not entirely positive on that.
Yeah, I haven't read the details. I do know that what the SBA is calling it is a first pass and a second pass. So if you never applied for the original PPP, you should go to the SBA website. I think it's under COVID-19 plans. There's a link that gets you to the PPP. The first pass is if you never applied for it, and that has a deadline of March the 31st. So you gotta get on it quick. And then of course, Brian mentioned the other one is if you qualify for a potential second, they're calling that a second pass. So if you received the first one and you had the drop in the income, then you can come in for what they're calling a second pass.
All right. Okay. Thank you, Joe. I appreciate that. Let's go to the next question here. And this next question is going to be, I'm going to address this one to Yolanda. So Yolanda, you can see from the question there, will any proposed tax laws affect the 2020 tax returns, i.e. the child tax credit increase? I think you guys have touched a little bit about that, but can you go into greater detail on that particular question?
So right now, one of the things on the table, like I said, social media ignores the word proposed and just runs with it. So the phone lines start ringing off the, oh my God, I already came in and filed, but the child tax credit is raising. No, it's still a proposal. It's on the table. It's not set in stone, but it's already 2021. So even if that does become a law, they have to figure out how to get that issued, or it would apply to next year's taxes. So I know one of the things they had on the table was sitting out a monthly stipend or a monthly something to equal the amount. But again, these are just proposals. So anytime you see the word proposed, as far as anything, even including the taxes, don't wait to file, because that's not going to take effect immediately. I've even gotten questions about a third stimulus. So do I wait? Because if I don't get it, I want to claim it on my taxes. That's not how that's going to work. Anything that's still on the table right now, it's like when you get married, you get proposed, you don't get any benefits until after the contract is signed. Same way with tax laws and anything on the table that says proposed. So it's not going to affect you right now for your filing this season. That'll be something that goes into effect later on or the next tax season.
Okay, very good.
Oh, I'm
Joe?
sorry. I'm sorry. I didn't elaborate on what the proposal is. The proposal right now is $3,500 per child, 6 and under, or under 6, and then 6 to 17, 3,000. Do I have that right? Wait, I'm asking y'all. Yeah, so it's two different. It's one proposal, but it's for two different. So 3,500 under 6, and then 6 to 17 would be 3,000 per child, as opposed to the 2,000 maximum that we have now.
There is the unemployment proposal that would affect 2020. And that is one of the things they're floating around is making the first, I think it's $10,000 of unemployment tax free. And so if that comes through, that will affect the 2020.
Yeah, but they would have to figure out like how to pay people back, and that the filing actually starts on the 12th. You know what I mean? Like, so those people that have already filed are kind of like,
they would have to amend.
Yeah, they would have to amend and kind of take advantage of that. So
that's the only one I know that would really affect 2020 substantially.
We can't hear you, William.
Joe, did you want to add something?
They should.
Who are you talking to?
I was addressing. I wanted to see if Joe had a follow-up. It looked like he wanted to say something. Now there he is. Looked like he'd wanted to say something and kind of add to that thought, Joe.
I was just going to say that, the IRS does pass some, or Congress does pass some legislation that's retroactive. And so if you had some of these things specifically, I tend not to go read it till it's law, because I don't want to remember the three things that they're trying to determine. But once it's settled in, if one of these proposals is unemployment and you have it, you may want to just not get an itchy trigger finger to file and hold off. And that way you don't have to go back and file an amendment if they make it retroactive.
Yeah, I'm encouraging people to slow down a little bit this year.
Yeah.
There's too many things on the table.
Well, that's been a big issue already. I've already had people that come in and I'm like, are you sure you have everything? Are you sure? Because some of the jobs have even been slower with sending out the W-2 forms, and some people haven't received 1099s. And are you sure you have anything? Yeah, I'm ready to go because it's almost the 12th. And what I do is I put them in the system, but some I don't send up. And I'm glad that I do it that way, because then they'll, later on, oh, I got another form. I got another form. I had one person that had 3 more forms come at different times. Yeah. And that's great advice to slow down. I mean, as tax professionals, of course, we want you to come in, but not at the risk of having a bunch of mistakes made that have to be corrected later. And then, and then some of the stuff, if you do file, like I said, an amendment is an option, but then some of the things that happen, sometimes they'll let you go back a year. So you can always amend later if, like I know it's usually with like natural disasters. Sometimes they'll allow you to go to a prior year and claim some of whatever. But that's not always the case, but I'm with Joe and it would be a good thing to slow down until March. And I was actually hoping that the tax season would get extended again this year, because like I said, everything's been pushed back and slowed down, but a lot of people are rushing in. It's like, I want to be in the first batch, but at the expense of what? You're either going to cheat yourself or have more things to do. And the amendments, I know last year they opened them up for electronic filing. So that's not always the case with amendments. So if you're due monies, you would want to get it all once versus having to wait 8 to 16 weeks for something to be mailed and then processed and then you get paid out. So
right. Yeah, you don't want to mail anything right now, that's for sure.
Definitely not right now. No, definitely.
One more thing, William, that is new, that is already in place, is if someone gets that earned income tax credit, the EITC, they're going to let them use their 29 income if it gives them a bigger boost than the 2020 income, which is, great. You can if your income was down in 2020, you'd be eligible for maybe less. So using the 2019 is a good option, but you have to know that you can do it and how to do it. So there's a lot of stuff out there.
And it's great that you said that, because I had a question. Well, some people's income increased due to either they got a work at home job or they got the unemployment. But I'm glad that Deb said that, because it only works if your income was lower in 2020. Because some people, if they made more in 2020, they're wanting to use 2019 to get a bigger refund. It only works if 2019 was bigger in 2020. So in 2020, if you got furloughed in April, so you only had $8,000 worth of income, and of course you're not going to get your maximum credits. And then last year you made $22,000, so that's going to give you a better tax, break. So it has to be if your income decreased in 2020.
I'm glad you pointed that out.
Right. Because I had a lot of people, well, last year I got more. Well, you made double this year what you made last year, so it doesn't work that way.
So that kind of leads me to a question, and I did not click on the article. I just kind of skimmed it. I think it was maybe yesterday morning, possibly it was even this morning. And right there on Yahoo, one of their main articles was why why filing your taxes right now may not be the best thing. And I was thinking, okay, what is that? Is it related? What is that related to? I think you were touching upon it just a little bit. Is there a change, or is there some kind of misconception on really what is the ideal time to submit your tax returns? I mean,
usually I say early. Usually I want them in early, but this year it's just there's too many changes that could still happen. So this year, so February 12th is the first time you can e-file. I'm expecting the computers to crash, so give it another couple of days, and then if the laws change, all the software has to update and the IRS has to update. So I would say end of February, probably just really jump in on it then. But that doesn't mean we can't start working on your returns now. You don't have to show up. So get us your stuff, and then we'll sit on it for a little bit after it's prepared and see if any changes need to be made.
Excellent. And I'm glad you mentioned that about the system crashing, because that's what I said. Because just think about it. If it crashed, who's going to be there to fix it? The 12th is when they recognize Lincoln's birthday, and you have Saturday and Sunday, which is a weekend, and then that Monday is President's Day. So if the systems crash on the 12th, who is going to be there to fix it? The federal employees don't work that weekend.
That's a good point. That's probably the bad day to start it then.
Exactly.
I hadn't thought about all that.
So speaking of dates, Joe, have you heard any thoughts, or has there been discussion about maybe having a push of the tax deadline this year away from April 15th?
I have not. I don't, I mean, I'd love for them to permanently make it June 15th. That makes more sense. I don't think that's going to happen. I think we all realize that, look, they could extend it like they did last year to July 15, and, you know, the world didn't come to an end. You know, the other caveat about filing is if you have investments, I would not be filing until mid-March, because some of those forms don't have a get out to you until February 15th, which you give it mail time, it may be early March before you're actually getting those documents. So anyone who has investments, again, because sometimes they issue revised forms,
Yeah.
I just tell them don't get in a hurry to file. Yeah, you know.
That's true.
Yeah, and then the IRS still hasn't finalized some of the forms as of yet, like I think it's the 8915, A through F or whatever it is. They haven't even finalized, they don't even have a date on that. But then they have some forms that'll come available February 18th and some that'll come available February 25th. So if you have anything other than just a W-2, or you're just not, you know, self-employed, I'm like Joe said, don't rush, because even with the stocks and everything, sometimes you won't get those forms until the end of February.
Wow.
And even with the school forms, a lot of times they don't come out till mid-February. But not only that, the IRS doesn't finalize some of the forms that you would need to file. And then you have people doing these, I won't say dishonest returns, but it's like not very accurate, because you're trying to skip when the forms are available or leave them out, and then you kind of mess yourself up. So then you have to go back and fix it. So yeah, if you have anything other than just a regular thing, I wouldn't rush in to do it until, he said, mid-March. The way things have been pushed back this year, I'd say the end of March. I'd say hit it right before April comes in, because you never know what you have coming, and you don't want to file, and then you have this other form, and then you're getting a letter saying, oh, you owe this, or we got this reported, and you've gotten this great refund that you're excited about, and you already went to Hawaii and spent it, and now you got to pay half of that. You don't want to do that.
It's going to be a
Well,
mess.
I think this just goes to show why you need to have a professional looking at your taxes and making sure that from a timing perspective, you guys are doing everything perfectly. We're going to go to our next question. Thanks for the feedback, everybody, on that. That was very interesting. We are going to go to our next question, and this one is going to be primarily for Deb. What are some of the biggest mistakes you see self-employed people making in regards to managing their finances and their taxes?
Great. Yeah. I work primarily with self-employed. People I call solopreneurs. When you start a business, you kind of want to either build a business and a team, or you want to just kind of do it yourself. And a lot of the independent professionals are in that category. And when you're used to doing things on your own, you kind of want to do everything on your own. And so they figure, oh, you know, taxes and bookkeeping, I can do that. It's not a big deal. And it is. I mean, they need to put a lot more priority on it, but that doesn't mean it has to be horrible. Because I mean, that's the thing, right? It's like, you know I have to do my books, but I'd rather, you know, wash the dishes than do my books. I hate, you hate it. And so I think the biggest mistake they make is trying to make it something it doesn't have to be. The main thing you have to do is track everything. What's coming in, what's going out. Let's categorize it into what can be deducted, what can't, what can we change a little bit to make it deductible. And I think that everybody thinks they have to do it a certain way, like get on QuickBooks. And but if you get on QuickBooks, but if you don't do it, you don't keep up with it, it just turns into a mess too. So I think the important thing I like to tell my clients is it doesn't matter what system you use as long as you're using a system. And so I have some clients who bring me these binders that they have just written things out through the year. And I have businesses that give me Excel spreadsheets or QuickBooks. You know, it doesn't matter as long as you're doing it. I can work with whatever you're doing, but if you don't do it and keep up with it, then that's just a lost opportunity, because there are so many opportunities for saving money. I mean, the government really encourages us in some ways to be self-employed. There's a lot of opportunity there for saving on taxes and helping to build up your profits and your savings and your retirement. So I think that it's one area that I totally understand wanting to do everything yourself. But this is one of those areas that let somebody else do the icky stuff so you can focus on the stuff you want to do that makes you money and makes you happy. And I have clients that I work with, I'll do everything. They just, do everything. And then I have clients that I'll just check in with them, every couple of months and advise them on where they are. And everybody is in a little happy place, and whatever they're comfortable with. And so I think that's just really important. As I said earlier, you don't know what you don't know. And so how do you know what you should be saving or keeping, or, what opportunities are there? When we do this for a living, we've done a lot of education on all of this stuff. We do education every year to keep our licenses and to give the best service we can. It's a lot. And the average small business owner or individual, for that matter, with their personal taxes, why should you need to know all that stuff? Why do you need to do that? You have better things to do with your time and your life. So do what makes you happy, and then let us do the icky stuff. So that would be it.
You're muted, Will.
Oh.
We can't hear you. He's muted. He doesn't see the little red mic.
Right. Well, I guess I could talk some.
I don't think he can hear us either.
Does anybody else?
I'm sorry.
There you go.
I'm sorry. The work well is right next to a volunteer fire station, and when they were firing up some sirens here a few moments ago, and I muted myself. I forgot to unmute. So what I was going to say is it kind of follows up into the sort of follow-up question that I had that you had presented to me earlier was, what's just kind of the overall best tax advice that you could offer self-employed professionals? Besides, of course, looking to hire a professional like yourself, what is the kind of like that one best tip tax advice that you can give? And we're going to start. That's a question I'd like to ask all of you, but we're going to start with Deb.
I think it just be putting that system in place, making it a habit. Habits are easier to handle than something that you just pile up. It's the end of the month, I have to do this. Just get in the habit of every day putting your receipts down. If you have Mile IQ, you have to swipe it. You can't just let it sit there. And so if you have a receipt, go ahead and write down, who you had lunch with to make it deductible. The IRS doesn't want just a receipt. They want to know, why was that meal deductible? Because you had a business. What was your business purpose? Who did you meet? What did you talk about? So when you get the receipt, go ahead and write it down. So I think that just getting a system together and making it part of your routine, I think will make life a lot easier in the long run. If you don't want to hire someone to work with, you need to be prepared to educate yourself. The resources are out there, but you have to take the initiative to do it, because not only are you missing opportunities, you also can get in a lot of trouble. I have a lot of clients, you hear that, I'm an LLC, what does that mean? I don't know what I'm doing. I'm an LLC though. So there's responsibilities you have as an LLC, and you don't pay yourself payroll if you're an LLC. And if you're a corporation, you do pay yourself payroll. And so I had a client earlier today say, do I need to be collecting sales tax? Yeah, you're collecting sales tax. So let's talk about that. So she didn't know. And so even you don't have to work with someone, round the clock, but even just bringing in someone I do a lot of just information sessions with people. I just sit down and talk with them and say, here's what you need to know. And a lot of people can take that and run with it. But, you could get in trouble. And so, and a lot of people are scared of the IRS and that there's reason for that, but there's not, you don't have to be afraid of the IRS. The state of Texas is going to come after that sales tax. So, you might worry about that too. So, but just make sure that you know what you need to be doing and make a routine out of it. Reach out for help when you need it. And just like I said, just focus on what you want to do, and make that money.
Awesome. So it's kind of the same question. I'll address this one now to Joe. If you could kind of let me know what you think your best kind of bottom line, this is the one tax tip that I'm going to share. What would that be for you?
Yeah, I actually think that probably everybody on the panel here, I don't know because I haven't had the discussion, but Deb alluded to it. I'm pretty sure Brian does. I'm guessing Yolanda does it as well. In addition to do tax preparation, outside of tax season, I'm pretty sure we all do consultation.
Yes.
And my consultation fees are not the same as a preparation. And I'll tell you what mine is. It's $150 to come and sit down with me for an hour and a half. And I just can't think of a better way to spend an hour and a half when you're new in a business, or even have an existing business. If you're not using a professional, you can kind of kick the tires with any one of us before you use us if you decide it moves to that arena. You know, I mean, at the end of the day, like Deb talked about, if you formed a new business, I could spend the whole hour and a half just talking about business formation and all the things that people don't understand what they've created before they've even stepped through our door. And it's a lot easier to have that discussion up front and not have to go unwind it after you've created it. So
yeah, it's harder to uncreate it.
Absolutely. So that's what I would say. I'd say go investigate a consultation and go get your questions answered. And trust me, if you don't bring enough questions, we'll be able to all talk to the cows come home about what you need to know and what you need to be doing.
Yeah, 100%.
Perfect. Hey, Brian, same question for you. And then I also have a really great audience question that I think is right up your alley. So tax advice that you provide.
Well, I mean, kind of going with what we were discussing just now about really kind of new business and going what Deb was saying, my number one thing is starting a business, you have to open up a separate bank account reconciled every single month because you want to identify things as you go throughout the year. And that's where you're going to make sure you got all your expenses and all your deductions, and you don't want to be commingling funds. And commingling just means you're trying to run your business out of your personal bank account. Yeah. You want to make sure you have one bank account that has everything that's on your business, nothing personal, and that will make your life a lot easier.
Excellent. So I have put up our audience questions slide, and so if you have any questions, participants, audience members, please feel free to share them here in the chat. And here is a question we have from actually one of our newest members. And she asks if there was a dormant LLC without payroll in 2020 and starting in 2021, payroll became active, can we apply for a PPP? And I think that's a great question for you, Brian.
All right, and the payroll started when?
The question is, there was
payroll started in?
Yeah, so they're starting in 2021, payroll became active, can they apply for a PPP?
If payroll started in 2021, they won't have any support for their payroll.
Yeah, if it was written out in 20, then no.
It looks like
I don't know.
They were dormant in 2020, so
so is it no activity?
Right. You know, they're not going to qualify for the payroll protection program. The whole idea of this program is not for a new business; it is actually for existing businesses keeping their employees on payroll.
Yeah, and one of the stipulations is you have to have been active in February of 2020. So if their business wasn't active, then they wouldn't qualify.
Right.
Okay. So so even if you were an existing LLC and you just happen to be dormant and you know off,
you have to have been active.
Okay. All right. Very good.
I mean, and don't forget the name of the program is the Payroll Protection Program. Mm-hmm. It's protecting people you already have on payroll.
Okay, and that makes total sense. Another audience question here is there relief for the distribution penalty of taking a 401k distribution for COVID relief?
Yes.
Yeah, that goes back to what I mentioned earlier. Almost anyone, I think, this year who has a early distribution before the age of 59 and a half that would normally be subject to a 10% penalty. There are some stipulations that you had to be affected by COVID, but there's a whole list of what that means. And I can't hardly think of anybody who's not going to qualify for that. And this is the situation where I think it's that 8019, and I think it might be Edward. And so 8915E might be the form. And that's the one where it's going to default, I think, to carrying the distribution over 3 calendar years. You're going to have to force it to do it in one if you want to kind of get it all recognized in the first year. So the short answer is yes. If you had that situation and you don't use a tax professional, this may be the year you want to use one, because if you've never used one, you should go do it once and get your, I mean, this is a year you're going to get your money's worth from what the preparer is doing for sure.
Yes, even if a penalty is waived, there's still tax. And so
Correct.
A lot of people don't seem to realize that it is taxable income. And so one of the options is to spread the tax out over 3 years, or to pay the money back into the 401k over the 3 years. So there's a lot of options there for your 401k, but it is confusing, so it helps to kind of brainstorm it out with somebody else.
I would actually like to throw out something else about that, about expand or allocating your distribution over more than 1 year. Taxes are going to go up, and depending on what income bracket you're in, you may want to pay the tax this year because taxes will be going up in a future year.
Yeah, that's an excellent point. You don't have to spread it over 3. Some people they want to put it off, but like you said, if you put it off, you might end up paying more. So
that's going to be a case by case where it's really going to drill down to the individual's return.
Agreed.
Yep.
I saw a question just now. Are we supposed to answer that one yet?
Yeah, I saw one. I think it was by
There.
Yeah, so this is so a new one here that's been shared to everybody. It's been shared to everybody in the chat, and this is from Javier. He's asking, when applying for PPP, can you include 1099 employees in your payroll or W-2 only?
W-2 only.
W-2 only. Yeah, the 1099s are contractors, so they have to apply for their own.
Yeah, and that's the simple reason why they can get their own PPP loan.
Right.
Just W-2.
Okay. Are we in concurrence there, panel, on that? Looks like.
Yeah, all agreed.
Can I make one other point about that? I've talked with a lot of people who have gotten their PPP loans from different loan providers, and not all of them are doing things exactly like they're supposed to be doing. I had one that got theirs based on their gross. This is Schedule C people got it based on their gross instead of their net. I had one that threw in her 1099s. And they got the money, but guess what? It's not going to be all forgiven. So they're going to have to pay it back. So be aware that just because these are the rules we're saying for PPP, your situation might be different. So don't be aware.
Okay. Anybody else want to add anything else to that question right there?
I would just say if you're doing PPP at all, you need to speak to somebody. It's complex subject for us who've been in the industry for years. It's got a lot going on with it. So I'd say just you want to seek out some advice.
All right. Tremendous. So once again, it is amazing how fast this hour goes.
Yeah.
Yes.
Roundtable discussions. It's 12:53, so we actually have time for maybe one more audience question. So if you would like to include that in the chat, please do so right now. Kind of as a final thought, and we'll go down the road here for our panelists, and we'll start with Joe and go Joe, Brian, Yolanda, and Deb. Any kind of final thoughts, just kind of overall, what is the temperature of your clients coming in with regards to how they're tackling their 2020 returns versus previous year returns? What do you see as sort of the biggest misconception or possibly even fear factor that people have as they start to take a look and really tackle their taxes for the new year? And we'll start with Joe.
I would just say something that's throwing everybody a little bit off, only because they kind of discarded it because of the 18 and 19 returns, where most people are now, of course, taking the standard deduction that was increased under the new tax code. And so when they were looking at the questions this year and filling out their packet, it asked, of course, the cash charitable contributions, which that was a tax law change that caught me by surprise, that even if you take the standard deduction and you're self-preparing, you do want to enter your cash, check, or credit card contributions, because there's a little above the line deduction for $300. It's not a lot. It is a law change. And so that's just a little something that's throwing people off. But again, one of the other benefits of using a tax professional is, I would say, I allow time to do a little forward looking at the end of my tax appointments. So if I'm only helping you with the past, we're not going to change it if I don't tell you what to do moving forward. So probably would guess that all of our panelists here today spend a little bit of time talking about where you're at now in 2021 and what you're expecting. So if you're not landing where you want to be, we can work with you to get to where you are going to be where you want to be on a tax return. So
perfect. Thank you, Joe. Brian, kind of the same question, your thoughts?
Yeah, I mean, other than really the stimulus checks, most things are pretty similar to what they were in prior years. I mean, some of the amounts have changed. Some things are uh, adjusted for inflation. Forms are always different. They keep moving things around. They can never keep the forms the same, which is annoying. Um, but as long as you have all your documents and you waited long enough to get all your documents, if you're seeing a tax professional, everybody's gonna be able to get it taken care of for you.
All right, perfect. Sounds like sound advice from a tax professional. Yolanda, same question, your thoughts?
I really think what Joe stated was perfect. Your the difference between a data entry clerk, because I know if you can find everybody, you can probably find 100 people on this block that says they do taxes, but they're not tax professionals and they don't know all of the ins and outs. So it's best to go see a tax professional, because not only can they tell you why you got the outcome that you got now and help you with your past returns, but like he said, set you up for a better situation from then out. I've helped a lot of people. I've even done their W-4s and printed it out for them to take it to HR, if they had an outcome that wasn't acceptable. But yeah, I think what he said was perfect, to see a tax professional, not just somebody who's like doing taxes at the kitchen table who can't answer your question. But the whole point, the difference between the data entry clerk and the tax professional is that you get help beyond today, and it tells you how to get a better outcome.
Excellent. Thanks a lot for that, Yolanda. And finally, Deb.
Yeah, I agree with that 100%. I call it reactive versus proactive. And if I don't see a client until the summer because they've gotten an extension, there's just not too much we can do if that's the past, and they're already halfway through the next year. So so being proactive is very important. Another little tax tip to share with you guys that you might not be aware of is one of the changes that they've already passed through, it's already done, is that meals this is for business meals are usually 50% deductible, because the IRS figures you have to eat anyway, so it's personal. They have changed it for 2021 and 2022, knock on wood, it stays in place, that meals can be deducted at 100% if they are in a restaurant. And it's their little way to help bring the restaurants back. And so if you're going to have a business meal, do it at a restaurant. And business meal does not mean driving through Starbucks on the way to your meeting. That is not, don't bring me all your Jack in the Box receipts. That is not deductible meals. You have to be discussing business with a client. It has to have a real business purpose. But if you're going to do it in a restaurant, support the restaurants and take 100% deduction.
All right. I love that. Just little tax tips like that.
Yeah.
So informative. Well, we're coming to the end of our hour. I can't believe it. It always happens so fast. I want to just thank our panelists for another amazing hour of insight, feedback, thoughts, and tips that
Thanks for inviting me.
all of us can realize when dealing with probably the least favorite task that we have to do each year, and that's our tax.
I love this stuff. This is really.
Exactly. So that is going to wrap up today's Lunch and Learn. As a quick reminder, if you joined late or you weren't able to look at the chat, I will collect some of the questions and also all of the ways to reach out and connect with our panelists. They will be included in a chat recap that will be part of the video that we will post for today's event. And so there's also going to be a link in there for you to be able to follow the WorkWell's Facebook page and other pages, so you can stay up to date with what we are doing here to stay engaged with the community. Thank you again to Joe and Brian and Yolanda and Deb, and to everybody, our participant list. We pretty much kept everybody that joined us at the first. They're still online here. So thank you all. Thank you to all our attendees for staying with us. And we appreciate everyone's time today. I hope that you guys have a great tax preparation season and that there are more refunds as opposed to payments that are made. And we look forward to seeing everybody at our next Lunch and Learn in March. You guys take care, stay safe, stay warm, and we will see you again soon, okay? Take care. Goodbye.
Thank you, everybody. Appreciate it.
Bye.